How do we predict the forex market? By prediction, we have three types of forex analysis. We have the fundamental analysis, the technical analysis, and the sentimental analysis. But we discuss on two main aspects. They are the technical analysis, and the fundamental analysis. Have you heard that traders trade in news? By trading news means you are dealing with the fundamental analysis. Fundamental analysis deal with the macro event of the country, or how one use the macro event to determine the behavior of the country, such as the GDP rate, the high interest rate, the unemployment rate, and the trade balance deficit. How can the gross domestic product or GDP rate influence our currency market? For example, a low GDP rate means a high importation of product and a high unemployment rate. Such an economy has a decrease in production rate. This will therefore encourage businessmen to import from other countries. By the habit of importation, businessmen would therefore put more pressure on the currency they needed to trade or to import with. This will therefore increase the price of the currency that they needed. This serves as an opportunity for forex traders in order to make profit in the forex market. With this example, the forex trader will know that the market is in the bullish direction. This will help traders to order for a buy. We have several examples that will help us to predict the forex market. Go to your menu, search for a news. It will give you numerous news over there. Search for a news which is related to the kind of currency pair that you want to trade with. For I am trading in gold. Here it says gold struggle to recover, trade at multi-week low near 1285. Read over your news and therefore begin to brood or think upon it and know the direction of where your trade is moving. Go back to your menu, press on code. Code will give you the numerous currency pairs that you have and their symbol. Choose the currency pair that you are trading with. On it, we have the gold. The gold is SAU USD. Open your chart. On the chart, we have the white and black candlestick. The white represents the bull candlestick. The black represents the bear candlestick. The bull is the gold, or the white is the gold. The black is the USD. We can't predict the forex market without indicator. These indicators on the chart is the alligator indicator and also the SMA indicator. This combination helps us to predict the movement or the trend of the market. The SMA has a period of 144, placing the SMA above the alligator or the alligator below the SMA. According to the news, you can see that the bear has taken over the market, or the USD has taken over, while the gold is struggling to take over the market. The bear is the black, or the USD is the black, and the gold is the white. Anytime the SMA is above the alligator means the market is on the downward direction, meaning any trader who opts for a sell will have a maximum profit of share since the gold is struggling to take over the market. Have you heard that history repeats itself in a predictable pattern? The word technical means having the skills to do something. Technical analysis means having the skills to predict or to forecast the future price movement. That is where the price will be or where the trend line can move to. Forex prediction without a trend line is impossible. So you can see from this chart that we have zigzag trend line. That is, we have the up trend line, the sideways trend line, and the downward trend line. This helps us to give meaning to the prediction of our trading or of our forex analysis. This chart is meaningless unless we apply indicators to give meaning to this chart. What kind of indicator do you understand? Choose it and apply it on your forex analysis. This indicator is called a moving average indicator, which has a period of 144. It will give us a clear understanding of where the trend line is moving, or of where the direction of the trend lines move. So you can see that we have a downward trend direction. following a sideways trend direction, which is reversing to an upward trend direction. The meaning to this chart is not complete. We need to add another indicator to it in order to make it complete. This indicator is called alligator indicator. Note also that we don't have one formula of analyzing Forex chart technically. Only if you do understand the kind of indicator that you want to use to analyze your Forex chart. We have attacked the alligator with the SMA, which will give us a complete meaning to this Forex trade analysis. If the alligator cross over the SMA, what is the meaning? It means the trend line is moving upwardly, so the possibility that the trend line will move upwardly is so high. The indicator that we have applied on the chart has now given us meaning. Now we can see that we have intermediate sideways trend direction, which serves as a warning for every trader not to enter into such a market. To make this warning complete for we the traders, we need to draw our resistance and support line to find out the highest price movement. The line I've just drawn is called the support line or the fall line. It shows the lowest point at which the reversal took place. Note that someone's support or someone's floor is someone's ceiling. The line or the horizontal line that has now appeared is called the resistance line. It shows the highest point at which the reversal took place. The gap in between the resistance and the support is called the range. The range is the difference between the resistance price and the support price. For us to be able to predict the future, we need to trace back the origin of the trend line by using the support and the resistance line. By tracing back the origin of the trend line, you can now see that the resistance has now turned to be someone's floor, because the trend line was coming from a downward direction, which was the highest point at that time. The behavior then changed later to become a sideways trend line. How would you know that the trend line will move upward unless it breaks through the resistance line? Thank you. Note that we don't have one formula for technical analysis. You can therefore apply your technical analysis now to gain more pips.